Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily QQQ report for Tuesday, February 15th, 2022. Before we look at the charts, I want to encourage you, as usual, to please click like. Each and every time you watch the daily QQQ report, it helps us out a great deal with whether or not we are found on YouTube. When people search for QQQ analysis, Nasdaq-100, so forth and so on, the more likes you have in ratio to the views, the higher YouTube rates you and puts you more likely to land on page one of any sort of search result if your numbers are good. Anyway, that really explains that. And also subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. And that is to your advantage to see the analysis when it's new, fresh, and relevant for your trading. Anyway, let's take a look at the charts. This is once again sort of the big picture, all daily charts here. We did, I think it's a month ago tomorrow, Wednesday, close below that 377.65 long-term channel bottom, which then indicated the 328.89 channel bottom. And, you know, in the interim, we've had a counter trend rally a couple of weeks ago, and now we've fallen off again. I think part of the reasons why we're falling off is because there's such inflation sensitivity right now in the marketplace, and the fact that I'm going to show you here how crude oil, I think I've mentioned this in the SPY. I can't remember if I put this in the QQQ or not, but I thought I'd throw it in there. West Texas Intermediate crude oil futures has been in the midst over the last couple of days of violating a significant overhead ceiling of resistance, indicating several more months, 3 to 5 more months, something like that, bullish continuation into the 115 handle, or in other words, $115 a barrel. Now, last week we did not close above this area by a 1% margin. That is needed. We are above it on an intra-week basis by a 1% margin. That happened on Monday. And usually when that occurs on an intra-week basis, you do get follow through. When I say usually that occurs, what I mean by is a mere daily settlement above that 1% mark, which is 93.91 March contract, if you want to keep an eye on that. If we close at or above that on Friday, that's sort of a finality here in terms of a secondary longer-term buy signal that should result in another 20% higher prices at the pump, and with many of the goods that are produced with petroleum products. Anyway, so there's that. It's looking like higher inflation, and I think that's weighing on the market. This is part of what's happening, not all of it, of course. I do want to mention that 328.89 is rising gradually and sort of converging over the next few weeks with the move low from about 3 weeks ago at 334.15. So I'm calling this a range of targeted support. I'll show that in a moment on the support and resistance. Let's open the chart up just a bit, show you that 377.65 channel bottom is still well above the market. Preceding that is a descending channel top. And this is an entirely valid descending channel top. And why I say entirely valid is because the high from November is how should I say this? The low that followed that high about a week and a half, 2 weeks later. And that's the way channels are constructed. Proper channels, channels that have trend defining capability. And so you want to follow that first low off the move high. If the move high was about a month later, as you can see, when we came back to kind of almost retest it, and then we followed the low following that, it's not as entirely valid in terms of mid to longer term trend identification. I don't know why I'm getting so deep in the weeds here, but 364.11 is a meaningful ceiling for the week. It's also preceded by a short-term channel top that is now at 362.81. And so if we were to rally over the next few days into the lower 360s, this is an area that can contain buying through the rest of the week, and we can easily fall back from there to new move lows. When I talk new move lows, I'm talking about below Monday's low. So there's that. On the way down today, 340.04, if you recall, that is that descending 1/3 speed line we settled above a couple of weeks ago. It is still there. And once, just by the way, with regard to speed lines, once that speed line matches the 334.15 low from January, which I don't have labeled here, but it is based on that 334.15 low, and it also uses the all-time high in November. Those are the 2 points. It's the 1/3 pullback to the upside. So once the speed line matches 334.15 or drops below it, it's no longer a valid speed line. But until then, it is. And it's not far off from the low settlement price in the 341 handle. Let's take a look at the support and resistance and make heads or tails of all this. I have lightened up on local trade levels. 340.04 below the market I just showed you. 353.90 is a short-term upside Fibonacci retracement. I came close to calling both of those session containment levels. And the reason I'm telling you that, if you're an aggressive day trader, you can have at both of those levels. It's just that because of the heavy nature of the market right now, below 362.81 and again below the 370s, anticipating 328.89 to 334.15, I really didn't want to detract from all that. And so those are solid intraday containment levels. 340.04 downside, 353.90 upside. Both of those levels are in reach today. Once again, that green horizontal line represents roughly where we closed on Monday. And so we could quite easily test 340.04 today and bounce nicely. But if we break 340.04, there is a chance that on an intraday basis, we'll fall back to that 334.15 low from January, which, as I show here, is the start of a gradually narrowing range of targeted long-term support down to 328.89 that can contain annual selling pressures. Now, I had a question on YouTube, a message, what if we break that 328.89? And I've shown this before, it's been a few weeks, but if we do close below 328.89, under most circumstances, I would say 286.86, the next 3 to 5 week target, and over the next 3 to 5 months or sooner, we could fall all the way to 257.54. But I would ask you to watch this daily SPY report. If this market continues south, the typical Q is very likely to test its long-term support at 328.81 before the SPY is to test its long-term support in the very low 400 area. So what I'm saying is, if if the triple Q closes below 328.89, it's highly unlikely that the SPY will have by that point closed below its long-term support. And so we're just sort of then in, you can play the short side short term with a settlement below 328.89, but just know that if the SPY finds solid support in the low 400 area, and it does, and it actually places a good low there where it could for the year itself, you cannot ignore that, obviously, in the triple Q. So it's a situation where we're going to keep one eye on the SPY. If the triple Q closes below 328.89 in the coming days, we're then going to be watching the SPY for reaching its target still in the low 400 area. I'm going to see if there's anything else that needs to be said. I will finish with, let's talk upside, actually. I actually haven't covered the upside. So, if we do push or open today above 353.90, we could reach 362.81. I think that would be a significant rally. I don't know what the fundamentals would be or the news that would induce that to occur. And that's really not my forte anyway. I don't expect to see that kind of rally, I guess is what I'm saying. But if over the next few days we reach into that 362.81 to 64.11 area, once again, it can contain buying through the balance of the week, and below which that 334.15 low from January remains a 1 to 2 week target. But if we do close above 364.11, then we should, in as little as 2 to 3 days, reach back into the mid to upper 370s, where we have really sort of a intersection between a descending 2/3 speed line and that former long-term channel bottom. That area is our long-term resistance, and below which the 328 handle is expected over the next 3 to 5 weeks. And really not until we close above 377.65 do I think we've got a good low for the first quarter, probably through the second quarter as we're approaching it now at the end of March. And I would then anticipate that 408.71 high from last November within 3 to 5 weeks or less. And I've got a lot going on in the mid 420s with regard to the weekly charts that I think it would become a realistic 1 to 2 month target if we were to close above 377.65 in the near term. But for right now, I think it's likelier that we're going to test that 328 handle long-term support, that targeted support, before we reach back into the upper 370s. I think that pretty much covers it. I'll leave you with the support and resistance for today. Let you print it off your smartphone, your desktop, and please click like each and every time you watch the Daily Triple Q Report. I will be back tomorrow for Wednesday's Daily Triple Q. You have a great day.